Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, this is a chart based off of today. I took this chart from this morning. What you're looking at here is from actually my trading account, and this here is based off my stock firm's charts. Now, this company that I use is, I'm not sure if it's still Thinkorswim, but it's soon to be TD Ameritrade. However, they do have, as you see here, one of the indicators that I'm very fond of, and it's called Person's Pivots. These are actually pivot points, but unlike most people's pivot points, they actually only give you one resistance, one support, and one midpoint number. Generally, with pivot point analysis, it's based on a mathematical calculation that can give you up to now, people have figured out 4 different resistance. It can give you up to 4 different support targets. Now, I have discovered that if the market is in a condition, let's say bullish, I don't need to look at all these other support numbers. If the market's bullish, I'm going to be looking at the market telling me a projection of higher highs and higher lows. Higher highs and higher lows. And if that's the case, then the market is deemed to be in a bullish market condition, as you see here. Now, with the person pivots, as you can see, it's not 100%, and quite frankly, not many indicators are 100%, but more times than not, it helps predict the actual high, the actual low, and gives me a clue of what time frame the market, if it does rally, number one, where could it go so I could set a profit objective. Now, just in the last week, we have seen the ISE's EuroFX index rally from 76 double around these lows up to approximately 79 and change. Now, it's interesting to note that the person's pivot points has helped me to filter out A, the market condition, and B, what price objectives. So if you're a trader and you're using options, what a beautiful way to set your objectives and maybe help you select the right strike price. And I always call it the strike price within the realm of reality. We don't want to buy, if you're bullish, a call option that the market may never even see the light of day, but maybe we could set an option strategy where we would want to be in some type of a perhaps vertical spread, and maybe to get a little bit more bang for our bucks, if the market retraces down to support, at that point we may then look to enter in order to say, gee, the monthly resistance is around, or weekly resistance is around 79. Here we are trading at 76 area. Boy, maybe I'd like to look at a vertical spread that's maybe within the next 30 to 45 days. If it hits this area, then I can set my profit objectives and help choose the right strike price. So that is the thinking that I use and how I go through this. More importantly, besides looking at the Euro currency FX index, as you can see, the ISE, the symbol EUI. So no matter where you're trading, whatever company, stock firm you're trading with, this is the word I'm looking for escapes me. I don't know why, but the EUI is the uniform symbol. There you go, uniform symbol that should work across all brokerage firms. If not, then you need to talk to your broker and say, what is the ISE index symbol? And it's very easy to find options on those as well.
John, we used to call it the ticker symbol. I don't even know if they call it that anymore, but it's another way to look at it, right?
Very good. A universal symbol. That's the word I'm
Yep.
really looking for. A universal
Good enough.
symbol.
Absolutely.
Right?
Yep, perfect.
Thank you. I don't know why I had a brain fart. I'm obviously entering close to my age 50, so excuse me, folks. I do apologize for that. But in any event, as you can see, this is actually from today. This was from this morning, prior to the market opening. As you can see, if we're still bearish, then we want to look at maybe calls, all right? If we're bearish in the futures, or if we think that the euro currency futures is going to test new lows against the U.S. dollar. Now, when you look in the newspaper and you hear the news, and if you travel abroad, they'll tell you that, oh, the euro currency is now at 125 to the dollar. It takes $1.25 to buy 1 euro. With the euro, ISE Euro FX Index, it's quoted in dollars to euro currency. So right now we're trading 79 cent euro, 79 cents. No, I was right, 79.79 euros, because it's not euro cents, to buy 1 U.S. dollar. So basically what you would be looking for is, if we think that the overall trend of the market is to continue lower into March, then we would want to buy the opposite. We would want to buy calls in the ISE Euro Index. And so the first thing I have to ask myself is, if the market's trading at 79.36, looking at the strike price on the call side of the ledger here, 79, I want to know what, in fact, is the bid and asks. And as you can see here, folks, this is pretty tight. You're looking at almost 14 cents to 9 cents spread on an index, a foreign currency index on the euro currency. And that's probably one of the reasons why I focus on the euro currency. It's one of the most active foreign currencies traded out there, number one. Tight bid and asks, and there's a lot of opportunities. And so far, most importantly, it has been adhering to a lot of technical analysis and signals. So with that said, you can look at these things. Again, it's not a matter of picking a market and saying, hey, look at this. It's a matter of picking a market that you can execute well and execute in. Because remember, you could sit there and place bids all you want, but if you don't get filled and the market's not liquid enough and there's not enough bid and asks, you're not going to get into the trade. So again, you can do all the analysis you want, but if you can't get in the trade, you're not making money. So that's the purpose of what so far we're trying to help with. Now, one of the markets that we've had a lot of success with in the recent weeks, and I say recent, I mean the last 2 weeks, we've seen a major move, and a move that was fairly predictable. And why I say predictable, because the Japanese yen in a seasonal tendency. Now this is the weekly chart, as it says here, weekly chart. Notice that after, on or about the middle of December, the Japanese yen futures, now this is futures. Now I want you also to share with you, this is a 33-year historic price tendency. That's pretty good odds. Year over year, the market has a tendency to follow this type of pattern, a trading pattern. If I could tell you every year not to buy in the middle of December, maybe wait until the end of February, over 30-year history, you had a better chance of making money or being positioned in a better trade. If I told you that, generally speaking, the low in the Japanese yen occurs in August for the year, the high generally occurs on or about the third week of October, that's the opposite, isn't it? Isn't this the opposite of what happens with the euro currency? The euro currency bottoms, has a nice bottom in October, where the yen has a nice peak. So it's kind of an inverse relationship. Interesting. Notice that also at the end of February, I'm not sure what the date is, I'm joking, it's the 18th, rest assured, we are following this, because right in here, we are actually targeting a profit objective for two reasons. Price and time. Time includes the seasonality aspect of the market.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.